everyone, welcome back to another episode. You've got the dream team again, the big three, Josh and Neja. How are you? Josh, first of all.
Yeah, I'm doing very well, Sam. Thanks. Great to have you back with us, mate. We missed you last week. Me and Neza held down the fort very well. But how was your holiday, my friend?
Yeah, very good, very good. We were just talking about it before I came on. I was in Dubai, which was fantastic, amazing country, and there's still cranes up everywhere. They're not stopping over there. I know a lot of our listeners live out there, and I know a lot of PIs as well that are on the platform live out there as well, and I can understand why you would. Incredible country, very safe. Probably a little bit too hot right now for me, but yeah, no, it was good. Good little trip, lots of fun. But now is time for me to relax a little bit. I've been here, there, and everywhere. So yeah, no, it was good. Good to be back though. Neja, how are you?
I'm doing well, thank you. We definitely missed you last week, and while you were gone, the podcast reached a major milestone, right?
Yeah, that's it. We've of a combination of everything now. We've reached 3 million, which is incredible. So thank you for everyone that's ever downloaded an episode or viewed a YouTube video. It's all massively appreciated, and we've got some big guests coming up. We've got videos to be released soon, and yeah, it's an exciting time for eToro as well. So yeah, fantastic to reach that milestone, and us three. We just want to say thank you to everyone that has ever listened or watched an episode. This episode, we're going to talk about Warren Buffett. I'm sure many people saw the news over the weekend. We'll talk about that. We'll talk about Palantir as well, and then we'll also talk a little bit about DoorDash Deliveroo. But before we get to DoorDash and Deliveroo, before we get to Warren Buffett, let's talk about Palantir, and it was one of the best performing stocks in the S&P 500 before its earnings. Is that still the case, Josh, after their report?
It's unfortunately not the best performing stock on the S&P 500 anymore, sadly enough. Look, I think when you get to the point where Palantir has over the last sort of few years, and when you're the best performing stock on the S&P 500, and when you're trading at 185 times next year's earnings like Palantir was, expectations heading into their earnings at the start of this week's were pretty high, and that left little room for error. I know when I just said 185 times earnings, Neza's like skinged, like she shuddered a little bit when I said that, coming from a value perspective. So look, it was 63% up, coming into earnings, best performing stock, actually almost about 20% outperforming some of the nearest performing stocks close to it. It did beat expectations on the top and the bottom line. It also raised its 4-year forecast, but Wall Street wasn't actually impressed. 4-year forecast disappointed a little bit, in terms of very similar to what we used to get from Nvidia, right? When we continue to see beats and then raises, but if that raise didn't come to the expectation that many had expected, then shares were going to come under pressure, and that's exactly the case here. With Palantir, revenue was up 39% year over year, smashed estimates. Its US commercial revenue as well, that was up 71% as well. That's sort of fueled by what is unrelenting demand for its sort of AI-driven analytics platform. They've had some massive wins recently, and especially in Q1, they made a deal with NATO, which was a Maven Smart System deal, and then they also had a deal with Google Cloud as well. They were some pretty key drivers helping, those revenue numbers in the quarter. Palantir also raised its guidance, as I said, that's for the full year to about 3.9 billion, and that just sort of shows how strong demand is for its sort of AI software, also how big its sort of commercial and government contracts are getting. It has a huge role to play now within the US government and other governments around the world, but essentially Wall Street felt that it wasn't enough to sort of justify that valuation, which is fair enough. Especially amid a time of so much uncertainty and volatility in what is a pretty tariff-heavy economic climate. Shares fell about 8% after hours, or during the session on sort of Tuesday. But I think what this does show us from Palantir's perspective is that they are, clearly a powerhouse in this AI revolution. Those deals that I mentioned with NATO and Google Cloud, they do sort of solidify its position, especially when we're sort of seeing defense budgets around the world increase. And especially when it comes to sort of federal technology as well, right? Governments around the world are sort of scrambling to stay up to date. We're also seeing that the Trump administration is proposing about $1 trillion defense budget in 2026. AI is front and center in that. Again, another big win for sort of Palantir as well. So for me, they're a big beneficiary of this sort of changing environment where we're sort of seeing AI front and center, but also defense also being front and center. That sort of mix is obviously a huge win. The positive as well is that for a long time, Palantir wasn't profitable. Now they're sort of really showing better signs of that. 45% operating margins in Q4. That just sort of shows that it's basically growing its profitability while scaling. That's really important. Shares are still up over 300% in the last 12 months. So although we're having a bit of a setback over the last sort of few days, it's not going to be attracting any value investors anytime soon, as I say, at that sort of valuation. But I still think it's a stock that ultimately is not trading on sort of pure momentum, but it's certainly not trading from a value perspective right now. And it was one of the stocks that came from when we sort of saw those lows out of sort of Trump's sell-off, if you like, when we had those sort of really bad few days. That was one of the stocks that continued to sort of rally. That NATO deal sort of really helped it. News came out around early April, but that deal was done in the March quarter. But again, might lose a little bit of momentum from those earnings, but I still think there's lots of positivity from it. So from an investor perspective, those investors that like it, I think, are still going to keep owning it.
Yeah, that's right. But I bet it wouldn't fit Warren Buffett portfolio with these valuation metrics. If you would only look at valuation metrics without any context, you might even think that this is a mistake because they're so damn high. And what was interesting for me from earnings call was that they were talking about commercial side of the business that kind of lost momentum as we saw it in the previous earnings. And I kind of saw this about what they were saying about Europe. They were saying that Europe is lagging behind on AI, and that we should, as Europeans, like step forward and start investing more into AI. That for now that we don't get it really, and they see it as a company that is really involved in AI, and this is something that really points out differences between different regions.
Yeah, I mean, I was just looking at the chart yesterday. I tweeted about it, and it's incredible. It went up to its previous all-time high, which we had back in February. Literally hit it perfectly, and then dropped 12% or whatever Josh was saying, and it came under pressure. And it's quite interesting looking at it from a technical perspective because people that bought a long time ago are rightfully still pretty happy right now. For those that maybe got in more recently, they're in a position where they think, well, do I hold it? Do I get rid? You know, what is their view right now? I think in the short term, it depends on what happens if price continues to move lower. And bear in mind, the week isn't done yet, and it would be the first down week we've had since early April. But if we move lower to around sort of $98 and $100 a share, there's so much what would be support in and around there. The market has reacted to that point every single time it's been there. So that would be a great area for sentiment to really get tested, where the bulls and bears will fight it out. The buy the dippers would be interested in that level. For those people that do think it's way too overvalued below there, you could see maybe more downside pressure. So interesting chart, interesting level, interesting stock. As always, it divides opinion online. I love whenever Palantir is down, you see the tweet. Palantir is down because people finally realize they have no idea what it does. But listen, if a stock can go up 300% when people don't know what it does, it is what it is.
I make a humble brag.
What was that, sorry?
Can I make a humble brag?
Yes.
My first ever 10 bagger.
Yes, fantastic.
So
when did you get in?
I actually bought IPO. So I think it's 2020, a few years ago. That was when I first bought. But average price is sort of still around the sort of like $11, $12 mark.
Fantastic.
So yeah, when you were saying there about sort of those early investors would still be happy, I'm one of them. So.
Yeah. Well, it proves my point.
Yeah.
One investor who has had many 10 baggers over his time, not Josh Gilbert, is is Warren Buffett, and of course he had the Berkshire Hathaway annual meeting was on the weekend, and it marked an end of an era. The man who's led the company for 60 years announced he's stepping down as CEO by the end of 2025, which is incredible that he's been a CEO for that long. I think the average time or the average age or something of a CEO on Wall Street is less than the amount of years that he's done, which is incredible. But what does Warren Buffett stepping down, Neja, mean for Berkshire Hathaway and for the investing world in general, do you think?
Yeah, as you said, it was a special moment during the meeting when he announced that he's stepping down, but we can't be really mad at him because he's 94 years old and he deserves this retirement. But this meeting felt more like a farewell than a typical Q&A session, because he was a CEO for nearly 60 years, as you said, and now he will be officially handing over his reins to Greg Abel by the end of the year. And Buffett will still remain a chairman. So this transition still marks the end of a chapter or an era of one of the most iconic stories in financial history, that's for sure. But it wasn't a big of a surprise. It was more like a confirmation altogether, because Abel has been already overseeing Berkshire non-insurance business, and he has been with the company for many decades now. But what was new was the tone, because Buffett didn't speak just as a leader this year, I would say. He spoke more like a man who is preparing to pass on his legacy and his philosophy. He emphasized some of the core values that he built during the years, like emotional discipline, patience, and long-term view. But yeah, if we also speak about other topics that were discussed on the meeting, like their cash pile, because it hit nearly $348 billion, which is a massive cash pile. And obviously he was asked why they are holding so much cash. But he explained that they nearly did a $10 billion investment, but they passed on it not because it wasn't exciting, but because it didn't meet their long-term view. So his philosophy is still here. And especially in today's FOMO-driven market, this action was a classic Buffett. And he also responded some questions about volatility after this April market turbulence that we saw, and he called those events like really nothing. He reminded investors that Berkshire stock dropped many times for 50% without any fundamental challenges with the business. So in short, he's telling us that this panic is temporary, but value is durable. But what his stepping down really means for us or for the company, for Berkshire, it is a change of leadership. And we saw also reaction in stock because it dropped like 5% on Monday. But honestly, there will be no changes in values probably, because Abel appears to be committed to preserving what makes this company special. And for investors, though, it is something bigger, because Buffett always gave us some kind of orientation where the market is going or what he thinks about it. And now, especially in those times of uncertainty, we will definitely miss that.
Yeah, what a legend. What a legend, hey? One of well, arguably the best to ever do it, right? So it's a real shame to see him sort of stepping away, but again, it was going to come at some point, wasn't it? Like you say, you can't be can't be doing that for forever. And it was interesting when you were saying there about they were potentially looking at a $10 billion investment. Imagine being the company. Imagine being the investor relations. It's like, oh, by the way, Berkshire Hathaway going to invest 10 billion. I mean, if that's do you know what I mean, a win for the business. If you're like the CEO of that company, you're like, oh my God, we've done it. We've done it. Like we've got it's basically the guard of honor in football. Like, come on, guys, everyone walk through. We've done it. We've done a great job. You're all getting bonuses this year because Berkshire are investing. We've done everything perfectly. But no, look, it's going to obviously be a real shame to sort of see him step away. But you're absolutely right. I think in the sense that, values aren't going to change, the business sense isn't going to change. But it'll be a shame to not sort of see him, just like Charlie Munger, not sort of there on stage, at each conference. I'm sure he'll still have plenty to say in media. I'm sure we won't be seeing sort of the end of him just yet anyway. So
Hopefully not. I mean, again, there was some interesting reactions online to this. One of the stats was that, and I might misquote the number, but I think it was Warren Buffett and Berkshire could buy the bottom 470 odd companies in the S&P 500 with the cash that they've got, which is incredible. And also some of the reactions were, well, you can tell how well the economy is doing that Warren Buffett had to work until he was 96 until he retired. So fingers crossed we're not going to be working as long. But what a man, he's going to be sorely missed. And yeah, as Josh said, one of the best, if not the best, to ever do it.
Yeah, that's right. Because it's not that hard to achieve good results when investing, but to keep them consistent, that's the magic. And he's the man who actually done that. But now if we move on to our third topic, yesterday we saw a headline about US company DoorDash that has agreed to acquire British rival Deliveroo. So Sam, as British, how do you feel about it? What are the main details about it? And how did competition react to that news?
Well, yeah, I mean, from a British point of view, I think it's really bad news. I mean, from a standpoint of Deliveroo getting bought, if you're DoorDash buying it, makes complete sense, and we can talk about that in a moment. But the UK are really struggling at the moment to keep some of the the best companies. Arm, you've seen, has gone out to the US as well, and others are being talked about that. I mean, we're in a football sense, we're like a feeder club. We're like a club that develops some half decent players, and then just as they're about to get good, a bigger club comes in this case, the US steps in and takes those players. So from the UK perspective, I'm a little bit worried that these companies are just deciding to take their business elsewhere to the US, or at least be held there. And I can understand it though as well. Unfortunately, that's just the way it is. We talked about Deliveroo on this podcast before, and how I think I'm responsible for any money that they make. Certainly recently, it seems to be all I've been eating. But that stops today. I'm going on a diet after all my travels. How long that will last, I don't know. But yeah, the news, I think it was yesterday or early in the week, that DoorDash have agreed to acquire Deliveroo. Values Deliveroo at 180 pence per share, which is quite considerably higher than what it closed at on the back end of whatever trading day it was. I think 29% premium, and that was something I guess that Deliveroo shareholders will be a little bit happy about, for sure. On that, the news, Deliveroo's share price rose a little bit on May the 6th yesterday to 175 pence. That rose about 2% there as well. There's also no significant regulatory hurdles expected. Amazon actually holds, I'm sure some of you already know this listening to this, they hold a 14.4% stake in Deliveroo, so they're expected to gain around about £387 million, which is good. But strategically, it makes sense why DoorDash would do this, and that they look to increase their presence in the 9 countries: so UK, Ireland, France, Italy, Belgium, Singapore, UAE, Kuwait, and Qatar, to compete against some of those rivals like Just Eat and Uber Eats. So it's a very fierce market, it has to be said. I mean, you go to any country now, and on the click of a button you can have 3 or 4 apps that will bring you food within 20 minutes. It's remarkable. You may go to Dubai and Deliveroo is there, and it works. And then I think we talked about what was the company that was big in Southeast Asia? Do you remember we talked about them before? Grab Holdings, was it? Something like that as well. There's a lot of competition here, so I can understand the acquisition. I mean, if we have I'm just going to bring up DoorDash their share price now. You just bear with me while I type it in. But I think, you know, it's not a massive deal, but it's one that strategically makes sense. I'm looking at their 6-month share price is up 11% over the last year. They're up 64%. So things are for sure heading in the right direction for this company, and they're actually not too far away from the recent high that they had back in February last year, albeit their all-time high from their IPO back in 2021 we're still significantly off that. Well, when I say significantly, probably only about 35% or so. So yeah, I think it's a good piece of business. Whether it's going to take them to the next step, we'll have to wait and see. But it's a very fierce market, very competitive. And so acquisitions like this, if they financially make sense, and I think they do, could be what takes them to that next level. And then, you know, next thing you know, you're pushing towards all-time highs and so on as well. So yeah, I think it's an optimistic deal, is what I would say.
Yeah, it's obviously a push to get into more of Europe, isn't it? Right, Deliveroo is that
Yeah.
sort of name in Europe. I think is Delivery Hero there still a thing? I think it's like Just Eat, isn't it, or something like that, still in Europe. So that might be the next one that comes up for grabs. But obviously Uber Eats is sort of still in there. But I actually just ordered from DoorDash tonight, so
There you go.
it just goes to show, doesn't it? But look, I think from the perspective of the business as well, I had a look at Q1 numbers the other day, record results. I think revenue was up about 20%, still running at a loss, but it just shows that obviously
Yeah.
this move here is just showing that they're obviously focusing on expansion rather than profitability, which is pretty standard in growth businesses. They're also looking, they're sort of expanding quite aggressively as well. Like I think they're also in the earnings report, reminding recent news, there's also recent news as well about another acquisition, which was also around about the $1 billion mark as well. So they're clearly looking for non-organic growth, trying to get a foothold in other markets where they can, and to obviously buy something like Deliveroo that's such an established brand, which actually the valuation doesn't seem too bad, you know, to get a
Yeah, that
brand.
really makes sense.
Yeah, a brand, you know, the level of Deliveroo that is known globally. Obviously, they shut down operations here, but it was something that is known, I think, you know, pretty globally. It was sort of always sort of Uber Eats and Deliveroo, really, almost became kind of, should we get a Deliveroo, right? It was in the UK, Sam, really, it was one of those early delivery names before sort of Uber Eats, you know, did
Yes,
it. I
it was.
mean, again, I'm from Cornwall, so we never really had it much, but in London, I remember it was definitely one of the very early names that came to it. So I think, yeah, it seems like a strategic move and the right one, I would say, for sort of growing the business.
Yeah, definitely. We can see a lot of competition in this field, and smaller players are getting acquired by some larger names. And I think that this is no surprise at this time. Unfortunately, yeah, for you are losing the business from Britain, but I think that we will see more deals like that. Unfortunately, I can't share experience with you guys. We have that in the capital city, but I don't live there, and I don't have any of these apps, so I keep cooking for myself. So yeah,
You have to
That,
go to you have to go to the shops every day and make dinner every night for yourself. How's you doing
it
that?
takes some
that's what I need to
organization.
do. I need to move to the sticks, and then I will stop getting really bad takeaways. Maybe that is the cure. It's not to move to Dubai. It's not to stay in London. I need to get out of these places, and yeah, also learn to cook. Actually, that would help.
Yeah,
Guys, if you're listening, we're going to start a GoFundMe for Sam to take cooking classes in London. So if someone can start, that'd
Although I wouldn't need to go GoFundMe. All I would need to do is stop Deliveroo, and I'd be so rich.
be.
But yeah, we'll on that note, we'll wrap it up for another week. And who knows what will happen in the next 7 days? I don't know if anyone saw Trump's comments last night. He's got an earth-shattering announcement. It seems like he has a new one of these every couple of days. So let's wait and see. And we'll see you all in 7 days. Josh and Nezha, thank you very much.
See you
see
then,
you
guys.
guys next week.